One thing we talk about on this channel a lot is the difference between sole trader and limited company. And at some point you come to a position where you need to move from a sole trader to a limited company. In this video, we want to tackle that and understand exactly what it means and how to best prepare for it. Stay tuned. Hello and welcome to this video. My name is Aaron Patrick. I am a chartered accountant, a certified UK trainer from Intuit QuickBooks, that QuickBooks chap on the internet, and also head of account here at Boffix. Now, today we're going to be talking about the conversation that's on a lot of people's minds at the moment, which is moving from a sole trader to a limited company. Now, there's various reasons why you may need to change from one to the other. Majority of the time it's to do with tax. Sometimes it can be to do with you forced to do it because whoever you're buying from or selling from has forced you into becoming a limited company. Or sometimes it's just to avoid that pesky little MTD, which I'm sure a lot of you will be looking to do as well. Either way, going from a sole trader to limited company is a big deal, but we can make it really, really simple on yourself by just following these simple rules and regulations when we go forward. You see, most of the time going from sole trader to limited company is at your benefit. The idea that not only do you have a more tax efficient way of being able to earn money, but you also have that ability to be able to make sure that you can protect what is yours. Instead of having to worry about your house or anything like that, be at risk if your business goes under, you get that limited protection that is what it's all about. So what do you need to do to be able to move from a sole trader to a limited company? Well, first of all, you need to be very particular about when you make the jump. When you make the jump, you need to be able to make sure that you have a very linear and precise date in mind so that you can make sure that you can wrap up that sole trader income and make sure that that's all completed correctly. And then you can make sure you're starting on the right foot with the limited company. For you to be able to move from a sole trader to a limited company, one of the things you're going to need is that bank account setting up. So as a sole trader, you may have got away with just having maybe a secondary bank or some sort of other bank you've been using, or multiple banks you've been juggling along to go forward. As a limited company though, remember it's a separate legal entity, well it's going to have its own bank account in its own name. Therefore, you need to go and create and make sure you've got that bank up and running. When you make that jump from a sole trader to a limited company, you need to make sure you've got that bank account ready and waiting to go. So whatever date you've got in mind, you're going to have at very least that bank account there. Then the most important thing you need to do is make sure that income is then being sent to that limited company. Now, if you raise sales invoices, that makes it really easy. You just raise sales invoices from the limited company as opposed from the sole trader going forward. But if you're using maybe some sort of third-party platform to generate your income, or if you receive sales from like your website or something like that, then you need to be making sure all of those are updated. So if you're using Amazon, eBay, anything like that, they need to be updated to reflect that you're a new limited company. And it's only the date that that platform has been updated is the date that you start selling from your limited company. And that's the date effectively that realistically your limited company starts. Again, with your website, you're going to need to update that, whatever software platform you're using to make those sales, they need to be reflect so that your customers who buy from you now are aware that you're being sold from your limited company and not from your old sole trader. The income side of things is by far the most important. You need to be telling whoever it is that's making purchases from you that they are buying from your limited company, either by sending that invoice out or by updating the platform to tell them that. Until that bit's done, you can't declare the income you're receiving as part of your limited company as opposed to your sole trader. So if you're doing it to save on time or save on taxes or for any other purpose or every other reason, then until you've updated your sales, you can't get the benefits of going through that limited company. So it's really critical that you get that updated as soon as possible, as soon as it works, when that bank account's up and running, and you're going to be able to start utilising the benefits of having that limited company. The next thing you need to consider is your expenses. So if you've got telephone costs or any other ongoing costs that you're going forward with, you really just need to let them know that going forward, that should be in a limited company name. Now, most of the time when you change the name, it is just as simple as changing the name, but every so often they might need you to take out a new contract and everything else. Now, if that's the case, our advice to you is to do it as soon as possible. It's not as critical as the income side of things because we can just then, quote unquote, expense it as a half of you of the limited company. But to keep things nice and clean and tidy, the sooner you move things over, the better it's going to be. And also, if you've got any ongoing purchases from suppliers, anything like that, Make sure when you make your next purchase with them, that they realise and they know that you're doing this as a limited company. It's going to be really, really important for you going forward. The next thing to consider is about the going concern, the moving of your sole trader to your limited company. Because if you think about it, that limited company won't be able to do any of the work or do any of the sales or basically generate any of the profits that sole trader did without the equipment, without the information, without the infrastructure that old sole trader had. So we need to move that over from one to the other. And we want to be making sure we do this in a tax efficient and simplified way as possible. And the best way to do that is effectively your sole trader sells that information over to the limited company, and then that limited company brings that into its own balance sheet and shows it basically in the limited company itself. So computers, desks, technology you've been using, software, those sort of things need to be moved over so that we can show them in that limited company and we can reflect how that limited company has been able to generate the income it's been generating. So we want to move that over, we want to bring that over and effectively close it down so the sole trader has nothing left on its balance sheet, nothing left that it's actually got there, and all of that information's moved over. There's an element as well that you could consider called goodwill. Personally, at the moment in time with HMRC's preference, bringing goodwill into the conversation is a little bit of a grey area, especially if there's no cash being involved. But there's always an opportunity to talk to your accountant about the possibility of maybe a small amount of goodwill coming in at the discretion of an accountant, just to make sure that you're showing exactly how that business has moved from one to the other. From a software point of view, whatever bookkeeping solution you've been using to do your books from the sole trader into the limited company, for most part, you may be able to get away with just being able to continue to use that piece of software. Most of the software out there will happily move from being a sole trader to limited company from a compliance point of view. And all we need to do is be really clever with our, what we would call closing journals and opening journals, to make sure that you close down that sole trader as the date we want to close it down. So basically take that out of the equation and reintroduce anything needed for the limited company. Obviously, we here at Boffins promote QuickBooks a lot, and QuickBooks is easily one of the most user-friendly in terms of moving from a sole trader to a limited company. Some of the others on the market out there do require you to start a whole new license to be able to move from one to another, but your situation may vary. Maybe this is the time, now you're in a limited company, now you're in your new structure, to move over to QuickBooks. If you do, don't forget we've got that e-store here at Boffins where you can get yourself some discounted costs on QuickBooks Online. The final bit from a sole trader to a limited company is just consideration of how you are going to remunerate yourself for the work that you're doing. As a sole trader, remember the saying that we've been talking about here a lot on this channel about the fact it doesn't matter how much money you take out of the business, it will never affect your tax bill. As an example, if you ran your business for a whole year and you took £1 out, and then you ran your business and you took £100,000 out, in both situations, you're going to pay the same amount of tax as a sole trader, because a sole trader has no indication or no relevance or no impact on your tax bill, the amount of money you withdraw and you give yourself. A sole trader is all based amount on how much that company has earned or that business has earned in that point in time. That's in stark contrast to a limited company, because one of the benefits is when you take money out of the business, yes, there's a consideration for tax, but you're in control of how much you take out. So you can limit to how much money you take out of the business, then you can be savvy on how much personal tax you need to declare, therefore you can determine how much personal tax you need to pay. And ultimately that's a complete stark difference between a sole trader to a limited company. So when it comes to you remunerating yourself, you're going to have to be a little bit more disciplined. Gone are the days where you can just go in and nip into the business and take out piecemeal money that you need. Our best recommendation and the best way to go forward is try and transfer, maybe at the end of the month, the amount of money you would like to receive from that business. If you need to transfer a little bit more as a top up here and there, not a problem, but don't just use your business card as a way to, every time you go to the shops, to just pay for something personally. You want to limit as much as you can the interactions between you personally and that limited company. So if you can transfer the money from your business bank account to your personal account and then do what you need to do with that money, then you're going to be in a much better position when it comes to dealing with moving from a sole trader to a limited company. So discipline on the way that you spend your own personal money and remunerate yourself is going to be critical for making a smooth transaction from a sole trader to a limited company. And there we have it. There are our ways in which you need to consider for moving from a sole trader to limited company. The other bits just to consider just quickly there, and ones you might want to talk about in a little bit more detail with maybe an accountant, is things like your HP loans, your loans itself, any grants that you're receiving on a continuing basis, any rental or anything that you've got or any property you own. You really want to consider about how you move that in. Moving property is a completely different kettle of fish to moving, say, your computer and from one to another. But at least you've got the basics now on how to get that up and running, what you need to look out for and what you need to do. It is mainly going to be down to that income. Once you've got your bank account set up, make sure your income has been transferred over, make sure your income is being shown as a limited company, and you'll be absolutely golden from there. Then make sure that the expenses are moving over nice and straightforward, and maybe get your accountant to sort out your opening balances. But either way, if you're doing it yourself, make sure that information's going through from there. That being said, let us know below, what else do you need from us? Would you find benefit from looking at open balances, for example? Is that going to help you in your business? Or do you want us to start looking into other aspects of moving from a sole trader to a limited company? Get your comments down below and we'll be able to do a follow-up video for you to make sure that you have everything you need to be able to make your business go from a sole trader to a limited company. At the end of the day, here at Bofix, our big motto is we want small businesses not just survive, but thrive. And generally, if you move from a sole trader to a limited company, that is a very good indication to me that you're starting to go out there and thrive and not just survive. Remember to use the comment section below if you've got any questions. Like, subscribe, pass this information around to as many people as you can. The more people that see this video, the better our opportunity is to get people out there into that situation and going from surviving to thriving. My name's Aaron Patrick. It's been an absolute pleasure to do this video for you. Just like, share, subscribe and all that jazz. And I'm sure I'm going to see you in the next video. Bye for now.